Good morning, everyone, and welcome to the European Session Brief. We're on Thursday, the 11th of May, 2023. Signs of moderating price pressures in the US in April will give Fed officials room to pause their aggressive tightening campaign next month, though inflation is still running too hot for policymakers to consider cutting rates. The CPI rose 4.9% from a year earlier, the first reading below 5% in 2 years. Markets are still looking for the US central bank to cut rates later this year amid fears that tightening credit in the wake of a string of bank collapses will lead to a marked economic slowdown. The highlight of the European session today is the BOE decision. Stubborn double-digit inflation in the UK is set to force the BOE into a 12th straight interest rate rise today, even though the end of a lightning-quick hiking cycle is coming into view. Economists and investors expect the MPC to back another quarter point boost to the bank rate to 4.5%. That'll be the highest rate since 2008. The decision is due at around about lunchtime in London, so that will be 4 hours time from now, the BOE, and then we'll have a press conference led by the Governor Andrew Bailey half an hour later. Red hot price and wage data have so far raised the risks of the BOE continue its hiking cycle through the summer. Elsewhere in Europe, in a liquid corner of swaps ensuring Credit Suisse debt have surged back into life as some hedge funds make the case they should have been triggered. Funds including 463 Capital and Diameter Capital Partners have been buying swaps ensuring Credit Suisse's subordinated bonds with the idea that the controversial write-down of the firm's AT1 securities qualifies as a trigger for them. Law firm Kramer Levin is helping with efforts to make a case for a triggering event. So that's something interesting just to watch. Not particularly market moving with what we cover, but it is just something ticking away in the background and a story worth keeping an eye on if you're interested in that kind of thing. China's consumer inflation slowed to the weakest pace in 2 years in April, while producer prices fell deeper into deflation, fueling debate about whether more policy stimulus is needed in China. The CPI rose 0.1% last month from a year earlier, reflecting muted domestic demand as well as base effects from last April's Shanghai lockdown. Core CPI, which excludes volatile food and energy costs, was unchanged at 0.7%. Producer prices fell 3.6% in April as commodity costs softened. The figure was more than March's drop and deeper than economists had expected. As we head into the European Open then, we've got equities which are still pretty much range bound. In fact, most markets have spent the week in a relatively tight range. We've got some data including Dutch, Irish and Portuguese inflation. We've got ING, Deutsche Telekom, all unveiling some results as well. The euro then, pretty jumpy day yesterday reacting to that CPI, but to be honest, pretty much unchanged. If anything, we've still got pressure on this big support level here at 1.0940. That's still the level to watch. I think you can quite clearly see how important that level is moving forward after the breakout to the downside of the ascending channel. Now we're putting a significant horizontal level under pressure, and if this goes, then that could be the start of a change of direction for the euro, and we could start seeing some trending to the downside. The cable though is pointing upwards. We're still trying to crack higher, albeit these wicks won't go away to the upside. I'm just going to put us onto a candlestick and you can see the wicks that I'm talking about. All these ones which are breaking above, closing below, and again you've had the wick, you got a higher wick today as well. We initially broke higher but rejected again at 126.45, so clearly facing some difficulties at this particular level. This is a multi-year horizontal resistance level, so very important, and you can clearly see the respect that the cable has been giving it this week. The DAX, there's not really much to add here. You've got a lot of lower lows, as you can see, one after the other basically all week. But it's been pretty quiet. Yesterday we had a bit more movement in the previous 2 days, but still nothing to write home about. The FTSE has also not really gone anywhere. The start of the week was here, so we are lower for the week, but we're still holding on to 7710, 7700. The question is, can they be able to hold this firmly enough? Because remember, this was an important resistance level not long ago. and it was the all-time high. I'm pretty sure I'm correct in saying that. Yeah, the all-time high you can see here was oh no, that was here, but we're still, it's all around these areas here. So this was the high. These were the highs really from pre-pandemic, and then we retested and retested. So you're just holding on to these pretty important levels here, and you can see why they would be important. If that goes, then you're starting to consider moves down to at least the 76.30 level. But if we can hold here, then we can look to obviously bounce back. But I'm just getting a little bit concerned now. After the most recent rejection, we weren't able to get back into the 79, 75. So if we do bounce, I'll be watching for a retest, and that's not a great trend line, but I'll be looking for a move into this resistance area, because that'll also be where we might see some pressure, some resistance as well from a potential descending trend line, which could be forming too. So yeah, just something to worth keeping your eyes on the FTSE. So yeah, pretty much it from my end. I will leave it there for today. If there's anything else, I'll see you inside the chat room. But thanks for listening, and all the best with your trading. Bye for now.